So, good evening, everyone. This is our usual Saturday evening session. We are on the 22nd of March. It's 4 minutes past 5 o'clock. I am conducting today's session as I'm traveling from outside. And that's why I have kept only two charts to make space within my 15.6-inch laptop screen. I have the weekly time frame on my left. I have the daily time frame on my right. As always, during these sessions, we first evaluate, analyze, try and understand, and strategize for the next week based on the Nifty first, the Bank Nifty, and then the rest of the sectoral charts. So starting off with Nifty, and on my left-hand side, as I told you, is the weekly chart. I'll turn it to the bar chart to express the way last week has played out is impressive. Yeah, one word, impressive. It seems very clearly that the 5-month run of negative closes finally will come to an end when we conclude next week, the month of March 2025. Yes, we have a bit of a confluence of Fibonacci on the monthly time frame, which can be reflected on the weekly. We had this range drawn. So we can say that this current bounce back that we are experiencing more or less comes from some kind of a zone level. There's always exaggerations. We did see some exaggeration here, but the index has bounced back well. Turning the weekly chart to Heikin-Ashi, we do not yet see a positive Heikin yet, but the momentum indicators are inching up a little bit. The trend indicators are not. The Heikins are yet to improve. You remember that Heikins are modified candles, correct? So it takes a little bit of time to reverse in comparison to actual price. So yet to get strong signs on the weekly time frame, but having said that, pretty good signs on the daily time frame. You will 100% agree with me that all throughout this fall, we've been patiently waiting for the first leg up. We did see this improvement of momentum, and then we did see this consolidation, and now 4 days of a beautiful extension of the first leg up. So what we should do is we should blow out the daily time frame. The momentum indicator is still fine, no problem. There's no point looking at the short-term RSI indicator over here because the trend and momentum are in sync. And so RSI reading will be quote-unquote overbought. Makes no sense. The reason we blew out the daily time frame is we would like to see that throughout this fall, this entire fall that the market has gone through, can we find meaningful supports, resistance zones, right? So what we'll do is we'll take it step by step, one at a time, and we'll see that the first fall marked here, this was the first fall. This was the low, a short-term bounce back, then the next fall. The first fall where it made a low, if I extend it, where it made a low, if I extend it, I do see that in the future, that particular low did turn out to form highs, which means polarity played out, which means that support changed its role and acted as resistance. And it acted as a pretty decent resistance, which means this is IMP important. After that, the next fractal low, if I draw and extend, will not make much sense. The next one will not. This one, okay. What about this one? I will clone this. Clone this previous zone, and I'll try and put it something like this. Okay. As I put it like this, I would like to see that this low from where you had a decent, meaningful bounce back. And if I'm not mistaken, this was the Trump rally. The index did come back close to it, this time pretty much more or less there. It did act a bit of resistance short term, nothing much here. This is an exaggeration. In the recent past, this range was not that meaningful. And now the index is right about there. So the fact that it had some meaningful instances in the past and recently it was a fake out, it was just moved out. It was a fake move, and it has certain importance. Of course, this importance is in line with this high also. So, I think what we should do is we should drop this zone as well and see that last time when the market gave a two-legged rally, it took out a previous support zone just to prove a point that this was a trap, and it reversed, which makes this level important, of course, which makes this zone, let's say, second degree important. It's not that important, to be honest. So we'll evaluate how things play out. So we've got some levels drawn. It's a derived entity. Nifty is a derived entity out of 50 important stocks. So I'm not going to drop any particular VWAP or volume profile or any tool pertaining to volumes. Yes, we can, just shift to Nifty futures. And as you can see, I have plotted the anchored VWAP from the top. Yes, we can go to the volume profile from the high all the way down to the low. And what is it telling us? When I take a look at the volume profile, the point of control is right up there, close to that 25K. Apart from that, there's a pretty decent amount of volume that had exchanged hands close to this zone that is over here, which is 23,600 roundabout for the Nifty future. Which means that if I go back to the Nifty spot, so more or less, this is the zone which should offer us short-term resistance to this recent rally. Is the RSI showing anything? Nah. Is the momentum indicator showing anything? No. Is the Heikin-Ashi showing anything? Is the Heikin-Ashi shrinking and all that? No. So looking at the daily chart, you will not get, or looking at the daily chart, we are not getting any sign of slowdown yet. Maybe after Monday's close or Tuesday's close, that I don't know. But if you're a short-term trader, then you have to probably roll down to 125-minute time frame or 75-minute time frame, whichever is the time frame of your choice. And over there, you have to find some signs of slowdown. Is it there in 75? No. Is it there in 125? Not really. So even if we roll down to lower time frames, the recent move has been really impressive. And based on that, we cannot say or anticipate that the markets are likely to come down. It's high chance, the probability is higher that the markets will hopefully sustain and extend further. And that's more or less the zone. 23,600 is what we got on the Nifty future. So yeah, 23,500, 600 is the level. Before I move on to the Bank Nifty and the rest of the sectors, we did discuss that the last time the index gave a two-legged rally like this, an ABC, whatever, two-legged, three-legged, whatever you call, it did not sustain. This time is also giving an ABC kind of a move. First, we would like to observe the nature of the extension. Very good quality. It had seen performance from large caps, then again the mid and small caps, then again the index heavyweights. So a nice relay of movements is happening. Banks, private banks have picked up. IT is still very much weak. Consumer durables and FMCG kind of stocks are trying to base out. So it's happening across the board. It's not like only a handful of stock is supporting. Not really. So the quality of the move is good, impressive. Next, what we would like to see is where do you slow down? And next, when you retrace, Do you retrace time wise or price wise, and how much do you retrace? Which are the stocks that retraces? What is the overall commentary during that time? Did something all of a sudden pop up, some negative news globally? Till that happens, we are going to evaluate markets behavior step by step, day after day. Okay, so that's the Nifty. Coming to the mid caps and the small caps, and I will go back to the two time frame, that is the weekly on the left and daily on the right. Pretty good, isn't it? No problem. We did discuss that there was a clean looking divergence which is helping the small cap and the mid cap, and so far so good, not a problem. Yes, in these kind of charts you will find lows and highs more or less coming close to each other. Whenever a chart which falls beautifully down like this, highs and lows do confluence. So draw your polarity based zones, keep them marked. You can do them on the index, you can do them on the sectoral chart. You should definitely do them on the charts wherein you are trading or you're looking to invest or trade. So mid caps, small caps, broader markets are also participating, no problem. Now, let me talk about the bank nifty. That's the most important pocket. So this range holds, and this is good news. This is good news because bank nifty was looking scary based on those head and shoulder patterns on the weekly. So clearly those pattern that we saw in bank nifty, private banks, finance is getting negated. It's getting violated, which is a good thing. So clearly a very good, well-defined support for the bank nifty has got established, and this is a polarity zone. Good. Daily time frame gave us a little nudge of divergence and just picked up beautiful rally. The good thing about the bank nifty, and we will see this in the private banks also, both the charts, is the fact that you will notice that it's been one-way move, right? Which means from this point, the index has reversed like a V recovery. And after this move, it is yet to give us the first pullback. And then maybe the next move, etc., etc. So the bank nifty's first move itself is pretty sharp, which is again a good sign. Because even if it retraces 50%, even let's say, it will not be a huge fall considering the size of the move that we have had. So positive from the bank nifty, from the private bank. In terms of our elemental reading, which we talk about the momentum, the trend, both of them have got in sync. Weekly chart is improving. All that we have to do is, for a pullback trader, you have to wait for some kind of a meaningful pull. So private banks and bank nifty, both of them are sync but stretched. They have moved quite a bit. You've got range expansion also. So wait, should not be in a hurry. Wait for a pullback and then look for a trade. Finance is the one which has been leading from the front. Recently, finance has been leading much before the bank nifty or the private banks picked up. So no problem over there, and it's a one-way rally happening within the finance. The PSU bank, which is a little mixed up, maybe will give us a nice looking head and shoulder, left shoulder, head, right shoulder, inverse. This chart also has moved into a beautiful sync. Now, it is not as stretched as the bank nifty, private banks and finance. It's taking its own sweet time. You will see the range over here is fairly within manageable limits. It has not expanded. Weekly is okay. We cannot comment too much on the weekly. What we can say is this chart has got into a good sync, and any kind of a pullback is tradable. Any kind of a pullback in the bank nifty or private bank may be questionable because it has already moved quite a bit. But PSU bank is getting ready for, hopefully, for a pullback and the next move up. So keep an eye on the top 3-5 names which can give us that move. Bank nifty, private banks. Okay, private banks, if it cools off, I will wait a little bit more. PSU bank, if it cools off, which stock? What is the extent of the cool off? Do we have an HAGB? So keep an eye on the PSU names. Private bank, PSU bank, bank Nifty, finance also is looking pretty good. All of them are bullish. PSU bank especially, wait for some kind of a cool off and then look for a trade. After the banking pack comes IT. This is where the trouble is still there. But there are signs of flush out behavior. Flush out I call is trap. Especially if you had noticed Friday's price behavior, it was a 2.5% gap down, inching below the low, the recent low, and bouncing back almost immediately and going back almost close to Thursday's high. Lot of stop losses must have got triggered on with the long trades of very weak hands. Okay, so Heiken language, divergence, momentum, trend, no, Heiken, yes, something, followed by a huge HAGB. From an analytical point of view, what I can say is last day's high and low is critical, are the two main levels for IT. That's clear. So if it goes above this high, manages above this high, as long as this low is not broken, the probability that it will not fall is high. It will go range bound, upside, etc. From a analytical point of view, it was fine, but from a trading point of view, from an execution point of view, it's really difficult for a short-term trader to take a call based on this kind of a difference, especially when you're looking for a bounce back on a weak chart. It's got its elements in place. It's got the divergence, it's got the momentum improvement, it's got the short-term, very, very short-term gutsy improvement of the Heiken. It's got a very wide, expanded pullback. Difficult. But you got the picture. The picture is, did IT bottom out on Friday? I think Monday, Tuesday, if we get higher lows, the answer could be yes. So you can, those who are predominantly contrarian in nature, you like to buy into a falling market close to the lows. This is the ground where you should look for. Whether they will fructify, whether they will give you that move or not, that's a different story. But this is the area. This is your area. After IT comes energy. I know these are the sectors which are important. Energy gave a very good move. And I will repeat again, as a community, I think we did fairly good in identifying this and this and this and then this, etc. etc. So I'm quite certain, I'm quite hopeful and certain that few of us who have understood these concepts well would have definitely made some good trades within this particular pack in the last 2 to 3 weeks. Larger picture, okay, means momentum is there, improving. Heiken has just improved. A two-legged beautiful move has happened. Not a very good place to go for longs now. If you're a trader, no. In these classes, I keep on saying that my key objective, what I'm trying to do, is try to position ourselves before the market does. If you talk to anyone over the weekend, they will have a small smile, little smile on their face, because now the portfolio has bounced back. Just go back 2 weeks, 3 weeks, things were very difficult and bitter. So people, thanks to this bounce back, will start to talk a little positive. Ye acha lagta hai, wo acha lagta hai, this start. That was not probably the commentary 3 weeks back. Right? So it's always good to try and position yourself before the mass does. That is where lies the main buck. So now, because the energy has moved this well, I don't think it makes sense to go long. I think it makes sense to slow down, book partially, book completely, or trail your stop loss. Do not look for go long. Next, you should look to go long next when you get a setup, as long as your trend and momentum are in sync. So pretty good sector, but I think it has already given us the short-term move. Auto, important. Now, Auto's weekly chart, I do not like it that much because it doesn't have much to talk about apart from some bouncing back icons. Daily did not have a divergence. Daily had signs of momentum improvement, a bit of price improvement, deeper consolidation, and then positive icon, and next to after that 3 positive icons, which I am reading this as it has bounced back just because the overall markets have bounced back. It did not create any positive structure within itself. Energy did create a divergence. Energy did give a shallow pullback, then an extended move. I don't see anything over here. So it's been a raw price kind of a move. I'm not too keen to participate on the long side over here. As I can see the previous fractal lows, will this become resistance? Will I get signs of slowdown? Next week we'll get to see. But I'm not too keen on our auto, though we have a trend momentum sink, which means going forward, if you get a pullback, it will be a long opportunity without much of a support. One can take it. Who knows? So keep an eye on the auto pack. I think we did discuss this in our Friday session. I think we did talk about this and we did figure out that the four-wheelers were leading in Friday's move. Your 3 main four-wheeler stocks. So evaluate them, check what those charts are telling you. Let's talk about metals. Now, metals is one pack which was beautifully, not exactly beautifully, but in terms of a wide range, it held, did not fall, gave the breakout, gave the pullback consolidation, contracted beautifully, and then now giving the next leg up. I was a little hesitant. I was a little worried because this polarity was so good. And generally, when it's this good with 2, 3, 4 times of supports being established, it does give some respect. It does, but not on the weekly charts. It's just gone up. A good sector, a well-established sector, any kind of a consolidation or correction should be an opportunity to look for the next move on the upside. So you've got a pocket of strength there. Now let's move on to the FMCG consumer durables duo. I like to discuss these two sectors next to each other. Now FMCG weekly, nothing. There's price wise, okay, momentum wise, no, price wise, our trend indicator wise, no, price wise, Heiken, that is nothing. It's just like the auto I spoke about, just a bounce back. There is better readings on the daily chart. The daily chart is, however, offering us something. We had discussed this. The move is slow. The move is not big either. Something. Right? So signs of improvement, not great. Not a very good place to go long, if you honestly ask me. What about the consumer durables? This seems like taking a bit of extra time to base out. Are the signs of basing out there? Yes. Are there any signs of quick short-term divergences? Yes. Was it close to any meaningful support, this 34,000? Not really. But nevertheless, it's taken a pretty decent time to base out, which the FMCG has not done that. Trend positive, momentum positive, Heiken positive. So all you know, any pullback will definitely help you. If you ask me between these two, structurally, by looking at the charts, the consumer durables seems to be a better looking candidate for a short-term probably move on the upside in relation to FMCG. So we are left out with pharma and realty. Now pharma, like the auto, did not have anything on the weekly chart at this juncture based on which I could have anticipated a move like this. It also did not have anything on the daily chart also. This is one example. no divergences, no strong signs of improvement on the higher time frame, but momentum improvement, trend and icon improvement, couple of pullback, and a beautiful rally. This is an example that um, you don't need a lot of confluences for a move to come. The move can come just by itself. This is what it has happened. So any trader who had gone with the momentum, trend, and pullback would have definitely benefited in this back. I, however, the way I track the markets and like to trade them, I wouldn't have, gone heavily in this kind of a setup. So pharma and auto, I'm keeping in similar pocket. I would like to see from where do you slow down? If you slow down, chances are pretty high. Okay, it's a pretty high chance that these charts will slow down. I'll add a sentence here. I'll add another sentence. Just keep it added here for future references. That if market slows down, makes a top, and starts to fall, if that fall is a significant fall, if something negative happens, and we get another leg of serious fall in the market, if I will be looking at these kind of charts, the pharma, the auto, and will be looking for an opportunity on the downside. But before that, there is that if. Final reality, like the consumer durables, this guy is also taking its sweet time to bottom out, to base out. At the current juncture, momentum trend is not a bad combination. Heiken is also supportive. All that we need is probably an HAGB and a pullback, and then the move. Does it have anything to fall back from the weekly? Apart from a weird looking RSI divergence, honestly, no. So move can come. It has the potential. This guy and consumer durables, they have the potential. FMCG has the potential. And we need to see whether they play out or not. From a contrarian point of view, IT can be really interesting. And so we say that going forward next week, the last week of the month, the last week of the quarter, the last week of the FY, if the metals, the private banks, the bank Nifty, they decide to slow down, the pharma's also moved quite a bit. If they slow down, do we see a shrug out? Do we see some movement coming in from a surprise bounce back from IT and FMCG consumer durable? Do we see some balancing act? You slow down, I will take care of Nifty. When I slow down, you take care of the Nifty. Index management, sectoral rotation, large cap vis-a-vis broader markets. We did saw that last week. If that happens, I think March will end in a relatively higher note. No need to celebrate. No need to even anticipate that we are going back to all-time highs. It's little far. Delhi dur hai. Actually, Delhi dur nahi hai because I am there in the capital today. So nevertheless, that's how it is. So the best thing strategically for you is not to chase the sectors and the charts which have already given you a good move, because it's been a 4-5 day at a stretch move. Look for fresh movements from different sectors, maybe a little gutsy trade on the long side. Or if you have already used the last week's rally, actually it's better to stay light, book partial, book something, trail the stop loss aggressively. Strategically, you've made good use of a week. Keep it. Keep it is more important than chasing for some more trades, right? Taking a quick look at the USD INR and the Dixie, the dollar index, the USD INR beautifully slips down. Good news. And this particular zone, which had acted as a polarity for the market, resistance, support, has now clearly has come down. So this is good news. Dixie, on the other hand, had already fallen. See, these correlations do not hold day by day or week by week. It's a generic correlation. It's trying to post a short-term bounce back. Let it come up. Will it affect USD INR? Will that in turn affect Nifty? We will see that. There's no need to hurry right now, right? So overall, I think we are in a decent position. We've had a bounce back. We are going to end the sequence of negative months after 5 negative months, and something to feel good about. Your long-term portfolios would have bounced back. Your SIPs would have bounced back a little bit. So important thing going forward is how well you sustain. Right. So that's my view on the Nifty and the various sectors. Let's move ahead for the rest of today's class and take a look at your doubts, observations, and questions.